Palantir is proving its worth again. The price is skyrocketing, almost reaching a new all-time high. People are celebrating. Atmosphere changed in a snap. Jim Cramer just dropped a massive bombshell on Palantir. Almost $500,000 are snagged. Palantir's next price target is crazy. What is happening? How will all of these make sense? Well, let me explain. Disclaimer. This is wild. Palantir seems to be making a full-on comeback. The stock has been climbing like crazy, and now it's reportedly shot up to a whopping $80 again. Can you believe that? But wait, it gets even juicier. Something else popped up today that made this whole pump even more exciting. Apparently, Jim Cramer decided to jump in and tried to work his magic on Twitter. Again, he posted this bold tweet about Palantir saying, "Nothing can stop Palantir, nothing." I mean, that's some strong energy right there. At first, Cramer's tweet got a ton of attention. Some people were freaking out, and others couldn't resist turning it into a meme fest. There's even this one classic meme that's been making the rounds. "Nothing can stop Palantir, nothing." Jim Cramer, January 23rd, 2025. With the caption, "Palantir bulls, look out. Someone has to stop this man." The reactions are all over the place. Some are panicking, others are laughing, and the rest are just bracing for what happens next. It's chaos, but honestly, pretty entertaining to watch. For anyone out there wondering who Jim Cramer is, he's a TV personality and market guru who loves sharing his takes on stocks. But here's the funny part. His predictions have this hilarious reputation for being the exact opposite of what actually happens. It's become such a thing that he's basically an internet meme now. People joke that if Jim says buy, you should sell, and if he says sell, well, maybe it's time to buy. But this time, it's different. Jim Cramer might actually be right. After his tweet, Palantir's stock really did skyrocket, and the reactions are pouring in like crazy. People are buzzing about how the so-called Cramer curse couldn't touch Palantir. One Twitter analyst even joked, "Jim Cramer's curse couldn't stop Palantir today." So did he just prove his point by purposely posting that nothing can stop Palantir? That's 4D chess right there. It's a wild theory, but honestly, the timing couldn't have been better. Palantir's momentum right now is unstoppable, and it's got everyone, from bulls to skeptics, glued to the action. Whether it's pure coincidence or some weird Cramer strategy, one thing's clear. Palantir is riding this wave straight to the moon. But here's where things get really interesting. There's still a ton of chatter about how Palantir is extremely overvalued and why people should think twice before jumping in. One analyst even went off on Twitter saying, "Palantir is extremely overvalued. I can see why some don't even want to touch it unless it drops to the 30s. This scam can keep climbing to $600, and it'll still make sense to sell, because the valuation doesn't support the price." It's a bold take, but it's not completely out of left field. A lot of people are skeptical about whether Palantir's price really matches up with its actual value. Sure, the hype is massive right now, but some think it's all just speculation driving the price higher and higher. That said, the market doesn't always play by the rules, does it? Stocks like Palantir can keep defying logic for a while, especially when there's so much buzz and excitement. It's the classic battle between hype and fundamentals. And honestly, that's what makes this whole situation so fascinating to watch. But hold up. Did you catch that part where he mentioned Palantir might hit $600 soon? Coming from someone who's bearish on the stock, that's a pretty wild prediction. It's not every day you hear someone who's not exactly a fan of the stock predicting such a huge jump. It's honestly insane, but it kind of proves a point. No matter what the public says, we can't ignore the fact that Palantir is out here defying all the odds. The stock's doing its own thing, and right now, it's making a serious splash in the market. Whether you're buying in or sitting on the sidelines, you can't deny it's one of the most interesting stories going on right now. Looking at the current charts, though, the more realistic price target that analysts are throwing out is $100. One Twitter analyst pointed out that Palantir just went up another 3.5%, marking its 8th straight day of green. That's seriously impressive. The stock's already up 30% since it hit the $63 range, and now, analysts are saying it's likely to hit $100 next. It's crazy to see how the momentum is building. Palantir is on fire right now, and those numbers don't lie. Despite all the skepticism about its valuation, the stock is showing some serious strength. If it continues like this, hitting $100 might not be that far off. And honestly, that makes the whole Palantir situation even more interesting. It's proving it has legs, even if the valuation still raises some eyebrows. And it looks like this $100 target is getting some serious backing from other analysts too. One even shared his take on Twitter saying, "Buy every Palantir dip because it's going to $100. It's a meme stock like GameStop, but Palantir has a better balance sheet." That's a pretty bold statement, but it makes sense when you think about it. Palantir's got some solid financials behind it, unlike some of the meme stocks that have shot up on pure hype. So, even though it's caught up in all the buzz, there's a bit more stability here that's giving people more confidence to ride the wave. It's like it's got that same chaotic energy, but with a more grounded foundation. The mix of hype and solid backing could really push it to new heights. No matter what the bears or haters are saying, Palantir doesn't look like it's slowing down anytime soon. One Twitter analyst laid it out in a tweet saying, "Palantir's flirting with $80 again. We're definitely crossing $100 in 2025. Haters gonna hate and say it's overvalued, blah blah blah." Look, the market doesn't care about your spreadsheets. The market does what it wants to do. Meatloaf time. It's honestly a pretty solid point. The market isn't always about the numbers or logic. Sometimes it just goes with the flow. And right now, that flow is carrying Palantir higher. Whether you love it or hate it, the stock is doing its thing. And it's tough to deny that momentum. As the analyst said, meatloaf time. It's like everything is just coming together for a wild ride. Here's the kicker. While retail investors are all hyped up buying Palantir, it's also caught the attention of the big players, those institutional investors. And it looks like they're jumping on board too. For example, Secure Asset Management recently made a move and bought into Palantir in the fourth quarter. They picked up a solid chunk of shares, which totaled a pretty significant investment, around $500,000. That's not small change. What's interesting here is that these institutional investors don't just jump in on any stock. When they start repositioning their shares like this, it's usually a sign that they're seeing something they like. Palantir's got the momentum, and now it's attracting both the retail crowd and the heavy hitters. With the way things are going, it's clear that Palantir isn't just a short-term flash in the pan. It's turning into something that's on everyone's radar. This is huge. Palantir seems to have fully bounced back, and it's doing it despite months of struggling with a crashing price. The hard work from the people behind the scenes is finally paying off, and honestly, it looks like Palantir's gearing up to do some crazy things in the future. And speaking of big moves, Palantir CEO Alex Karp is about to drop his book soon. It was actually mentioned by billionaire investor Mario Gabelli in a recent CNBC interview. Mario said he really believes this book is going to change how we see business, technology, and even the direction of humanity as a whole. He went on to say that The Technological Republic, the name of Karp's book, is going to be a game changer in how people value companies. It's going to reshape how we think about things like external macro issues, tariffs, immigration, you name it, and how companies can flip those challenges into opportunities by embracing technology. He used John Deere as an example, saying they wouldn't be as affected by things like tariffs if they leaned into tech. And that kind of thinking? It's exactly what's behind Palantir's value proposition, transforming businesses through software to make them more efficient, cut costs, and ultimately thrive no matter the global chaos going on. Mario's view is that ideas like this, once considered radical, are now becoming mainstream because the world is shifting. Businesses need to adapt, or they won't survive. Karp's book is going to bring these ideas to the forefront, and that's exactly why Palantir continues to stand out. It's not just a tech company, it's one that's got a vision of technology's role in reshaping the world. And with Karp's philosophy getting more attention, it's no wonder Palantir's value keeps growing. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.
When we talk about Coinbase, we know that things are serious. The crypto market now is crazy. This is a massive tug of war between bulls and bears. The Ethereum ETF was just approved, and the timing couldn't be worse. Shiba Inu investors ring alarm because things are wild. They panic, and it seems that there is only one way to save your investments. But what is it about? Well, let me explain. Disclaimer. Recently, Shiba Inu's price performance has been anything but bullish. The asset has struggled significantly, failing to hold its ground above the local support level. This downturn is underscored by the exodus of whales, signaling that the market isn't ready for a growth phase just yet. This is devastating news for the Shiba Inu community, which has been hopeful for a turnaround. Adding to the complexity of the situation, we recently saw the approval of an Ethereum ETF, sparking immense excitement across the crypto market. This enthusiasm was well-founded, as the ETF's approval marked a significant milestone. The Ethereum ETF is now in the market for the first time. Surprisingly, this surge in interest spilled over to Shiba Inu, with whales suddenly showing renewed interest and attempting to push its price higher. However, despite this temporary boost, Shiba Inu has struggled to maintain momentum, highlighting the challenges it faces in the current market landscape. Shiba Inu has recently succumbed to strong selling pressure, pushing its price below crucial support areas. This decline shows how it failed to maintain its position above a key threshold. At the same time, there has been a noticeable drop in large transactions, indicating a decrease in activity from major holders. This combination of factors paints a challenging picture for Shiba Inu's market presence. For instance, there were 341 large transactions over the past week, but only 82 in the last 24 hours. This sharp drop suggests that big holders, or whales, are reducing their positions, weakening the buying pressure needed to sustain higher prices. While 82 large transactions isn't zero, it's still 4 times less than what we saw at the peak. This decrease is quite noticeable. It's like going from seeing a bustling street filled with people to one with just a small crowd. The difference is significant and hard to ignore. At the same time, the volume of large transactions in the past 24 hours was 3.36 trillion Shiba Inu, compared to a peak of 5.7 trillion Shiba Inu over the past week. This indicates a slight relief in the activity of big holders, but it still suggests ongoing bearishness. This is quite an interesting development. Just 2 days ago, the Ethereum ETF was approved, which should have sparked excitement in the market. So, where's that excitement now? Why did Shiba Inu's price plummet so suddenly despite this positive news? It's a puzzling turn of events. But hey, here's some good explanation of what's happening now and what to expect next. Even though Ethereum ETFs were approved, trading hasn't started yet. This process involves several steps, including setting up the ETF, ensuring regulatory compliance, and preparing the market infrastructure for trading. Until these preparations are complete and trading officially begins, the full impact of the ETF approval won't be felt in the market. This might explain why the excitement hasn't translated into immediate positive price action for Shiba Inu. Well, this is what many people were thinking. But there's something very important they seem to not understand. Do you remember Grayscale? They were the ones dumping hundreds of millions of dollars worth of Bitcoin. And they were the ones who were the ones. ETF was approved, causing multiple market crashes. Here's some analysis. Grayscale investors could buy Bitcoin at a discounted price, with the discount hovering around 48% in early 2023. This significant discount led many investors to sell their Bitcoin as soon as Grayscale's Bitcoin was converted into an ETF. But with the Ethereum ETF, investors were able to buy Ethereum at an even bigger discount, which was almost 60% in early 2023. Given this substantial discount, many Ethereum ETF investors are likely to sell and take profits, once ETF trading goes live. The reason is straightforward. Buying at a discount means they can sell at market value and lock in considerable gains, making it a highly attractive option for them. So, this might mean that the whales are currently hesitant to invest because they anticipate prices will drop further. And that is just the tip of the iceberg. We already have Bitcoin and Ethereum ETFs trading in Hong Kong, and we can see the difference in flows there. This approach is smart because it allows us to analyze existing data to predict future trends. So far, Hong Kong Bitcoin ETFs have seen total inflows of $105 million, while Ethereum ETFs have only seen $17 million in total inflows.